All right. Hello, everyone. Mark here. Thanks for joining me for another Greenbridge Investing market analysis. So this is a live stream, as you know. And in today's session, I first want to cover that recent Bitcoin swing trade long that I sent out yesterday, because it's important not just for the buy signal, but it's important to recognize when things don't work, okay, or what that starts to look like, so that you could make decisions on your own and manage your risk. The other thing I want to talk about is the stock market and how it's faked out from the short side. And what I want to point out is how the chart can tell you one thing, but there are times when you need to pay attention to the context. And that can really help you be prepared for what the chart can do next, even though it will not be obvious on a chart. All right, so those are the main points that I want to make. So for those of you that are new, this is how this works. Just share your symbol or your market that you'd like me to analyze in the chat now. So once I complete my analysis, I can go over the charts that you'd like to see. All right, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult the licensed investment advisor. By the way, this is my mic setup for the Talking Markets show tomorrow, which obviously you guys can hear me pretty well. So I didn't get any complaints about the sound over the previous show. I got like one complaint, and I don't even think it was an accurate one. So I think I'm set up properly now for the Talking Markets show. If you haven't seen it, you can watch the previous episode here on the YouTube channel. And tomorrow we'll be streaming live at 4 p.m. Eastern time as well. Okay, so let's get into this. Let's begin with Bitcoin. Now you can see my Bitcoin chart. And so, hey, photo, no problem. Chris, nice to see you. So I drew a triangle on the chart because that's pretty much the formation that we have. I took the signal, I sent out the signal yesterday because we had the higher low developing from a pin bar, okay? You see the pin bar there? We had a little inside bar. We started to take that out, and I said, okay, this is enough information to justify risk, even though the location, hey DJ, the location is less than ideal. And I'll still say it's less than ideal. Hey, Shayshank, nice to see you. And it's less than ideal because we're in the middle of this range, okay? These are tough spots because the probability is not as favorable compared to if Bitcoin went to a better level. Like, if we had double bottom off of this level, that would be slightly better. Or if we had the failed low situation in this area here, the 99 or 98.50 area, if we had that, as a signal, that would be a higher probability of it going in our favor. Now, it doesn't mean that this trade is not going to work out. It's just because of the location and the situation, it's not as high a probability. So what does that mean for us? That means we categorize it as an aggressive trade, and we know right from the start that we should be taking a lower risk, right? That's why we assign 1% risk for sure. Like, there's no question that I don't care if this trade goes to 15,000, it's still a 1% risk type of trade. If it was at 98.50, we would be open to a 2% risk, okay? Because the probability would be better and there'd be a lot more potential in such a trade. Adjusting your trade, adjusting your risk in terms of like market structures and probabilities really helps, because the idea is this: if you're wrong, you lose less than if you're right. That's the whole idea. If you can't get that idea to work, you can never make money. Okay, even if you win occasionally, even if you get like a home run once in a while, it's just an illusion. So as far as this Bitcoin trade is right now, I even shared the buy signal itself, the actual buy level at 675 on TradingView yesterday. I just didn't share, I only shared one target. I didn't put the stop, I didn't put the other targets, because obviously you have to be a member to receive that by email and text. So as far as right now, it's behaving, okay? We should see a green close. We still have a few hours before this thing closes, but we're still in the range. We tried to break out earlier, all right? But as you can see, the the follow through is still limited. What I want to see from this point is I want to see a sharp candle. Now, something like this. Someone asked in the chat earlier, Kevin, I believe it was, in our active investor chat, about when I mentioned short squeeze, because he was asking about, can you find that information by looking up some of these charts on TradingView that show like the BTC shorts, that kind of thing. And as someone else pointed out, Urzo pointed out, it's not the most accurate information in the world. When I refer to short squeeze, I don't look at those charts. I don't look at the short interest. It means very little because we can't really get a sense of the full population of shorts. And as Urzo pointed out, there's, it doesn't account for many of the exchanges and the derivative exchanges where there are many shorts. So when I refer to short squeeze, I'm referring to the population of shorts. I don't know how big it is, but I'm referring to the population of shorts that got short in here. And now they're stuck, okay? They're stuck, and if this thing starts to push and buyers start jumping in, it will force those shorts out. So even if there's not a huge amount of shorts, it doesn't matter because their buying pressure will just add to the longs that are jumping in, and that's what will propel this thing or give this thing the momentum to take out this lower high, that consolidation lower high, which is likely, okay? That's the sign we need to see. Hey, Michael, nice to see you too. That's the sign that we need to see. We need to see a decisive close above that high. If we do, then this thing is on its way, okay? Then I would be expecting this thing to, even if it doesn't go straight there, I'd be expecting this thing to work its way back to the 11,600 to 12,300 resistance zone. And as you know, our targets are distributed between here and there and slightly higher, right? But I'm interested in taking risk off as soon as possible. So that's what we are anticipating, but that's what we need to see. That's a favorable scenario. Now, what can go wrong with this is the other scenario. You should always be prepared to recognize what can go wrong. Otherwise, you get stuck hoping, and then you can, it may not even be necessary to take the full stop on something like this if we get the right clue. So what can go wrong is this thing, the momentum fails, okay? And we see like a bearish pin bar, like right here, like tomorrow's candle's a bearish pin bar, something like that, or a bearish inside bar. Now that will be setting up for a sell signal at that point. The question is, will that sell signal follow through? And that's a question that only the market can answer. A chart will not help us answer that question. So the thing is, at that point, and I'm telling you this now so that you'll be prepared if you have to make a decision, if we see the inside bar high, you have a choice. You can exit the position early before it gets to the stop and take a small loss. Okay, you can do that. Or you can stand aside and let the market work. That's what we typically do, is we determined our risk in advance. That's our risk. Now either the market goes to the stop or it doesn't. Because what can happen if we get that sell signal is, again, lure in a bunch of shorts, just like this sell signal here, and then develop into a higher low or double bottom. Which, if you exit, you can always get back in at that point. But a lot of times the problem is, what if you're not watching at that time? What if it's, at weird hours and you happen to be asleep or something and you miss it, right? That's also a possibility. So that's why we have enough on our plate to look at. I mean, we're watching many markets. We can't sit here and babysit one of them. So we have our stop, and that's our babysitter, the stop. It either goes to the stop or it doesn't go to the stop. But you have a choice, and if you want to exit early, that's the sign. That's the sell signal that you need to consider. It's got to close red. It's got to give you an inside bar, pin bar, or take out today's low. It's got to close red, and that's where you have to make your decision. Okay, so that's the Bitcoin trade, and those are some possible scenarios. Again, if we don't see that red bar and we just keep seeing green, then we should see that pop. Once it starts to push this lower high here, that's when the short squeeze momentum will often start to take hold, because the shorts realize they're wrong, they start getting forced out of their positions, and new buyers are buying at that point. Okay, they're buying the breakout. We are in for all that. So that's what we want to do. We want to anticipate that type of herd behavior, because that's what it is. All right, so that's Bitcoin. Now, We had a couple of questions, and Andrew wrote a nice article yesterday for our members about, the altcoins as well. So let's just take a look at Chainlink, because that's one we get questions about. And someone asked, is this trade, because we sent out a trade idea a week ago, is this trade idea still in play? Yes, the idea is still in play. Okay, you do have the higher low developing right there, which is nice to see. Our original trade idea was never activated because it never filled the order. We had a buy stop above the market, never filled. Okay, no problem. So now you can argue that this is a buy signal in here. You have the inside bar, it's taken out. But just keep in mind, if Bitcoin fails, this is going to fail too. Also, it would be nice to see if it could take out this swing high over here at, what is that, like the $11 area? So keep in mind, and this is the key point here with these things, it's all the same trade as Bitcoin. Whether you're buying Ethereum, whether you're buying Chainlink, whether you're buying, Litecoin, right? Let's take a look at Litecoin. It's all pretty much the same trade. Wow, Litecoin still looks like garbage, but it's all the same trade. So we always suggest that you don't take all of them, okay? Monero was a nice winner for us. Look at that. And now it's trying for its next leg higher. This thing reached 2 of its targets. I'm not sure if it reached its 3rd target. I don't think it has. But this was called also the previous week. This activated and went right to its 2 targets, right? Which makes you a strong hand at that point. And really doesn't matter where it goes after that. It can go to the stop and you're still pretty much green. But this thing looks like it's going for another leg. Monero is in a position to outperform. Okay, it's relatively strong to Bitcoin. But my point is, it's not a good idea to take them all because it's all the same trade. Okay, let's take a look at some of the less expensive ones, like XRP is a popular one. I mean, look at that, right? That one's taking out its swing high. So it's got the higher low in place. Okay, nice. But you're going to need Bitcoin to follow through. Otherwise, this thing will just do a lot of nothing. You still have this resistance just where it's fooling around right now, which is that 25-cent area. It's still fooling around there. But this is a good sign. Nice structure. All right. Other ones that people ask about, NEO. Look at NEO, not underperforming. This isn't good. This is not what you want to see when Bitcoin's trying to break out. But it's in a great location. So, if this thing can generate a buy signal, that's another possibility. But you have to use your discretion on those. It's not a good idea to take them all. All right, so I just wanted to review a couple of those real quick. Now let me get to the stock market. By the way, if you're new to our channel here, please make sure to subscribe to our channel, the Greenbridge Investing YouTube channel, so you get an email notification every time I do one of these. Plus, like the video if you like it, because it's very nice to see. It's very encouraging. And also, check out our website, greenbridgeinvesting.com. We have a swing trade signal service by text, by email, portfolio management ideas by email, and our chat room, which we're always looking to improve the technology on and stuff like that. But there's a lot of perspective shared each day to update our trade ideas. Okay, and if you can, please share this video with your social network. I'd really appreciate that. It'd help us out a lot in terms of marketing because we're not very good marketers. All right, anyway, so let's take a look at the stock market. And thanks for sharing your symbols here, everyone. I'm going to get to those once I complete my analysis. All right, so again, if you're new, just share your symbol in the chat and I will get to it momentarily. So let's take a look at the stock market. Here's the thing. So on Friday, all right, we had negative news, and I talked about it in the chat room. I said it took out the previous day's low, which is bearish, okay? That's bearish. But here's the thing. What you have to be careful of in those situations, like people that are completely isolated on charts, it's easy to get faked out in that situation because you have to recognize the context of the news. The news that came out was basically an overreaction. And if you don't recognize that, it's very easy to get caught up in the price action, not realizing that it's the herd overreacting. And any little ounce of news that comes out, any little ounce of positive news, especially after like a Friday afternoon, Saturday, Sunday, there's so much opportunity for positive news to come out while the market's closed that you're running a huge risk by being short, okay? Staying short something like this. Even though the chart pretty much said this is sell signal off of a failed high area, technically that's a short. But when you put it into context, you realize, oh, that's a very risky short, okay? And now here's the proof. So what if you had taken that short? Well, on a day like today, you should be closing it and taking the loss. Otherwise you're running the risk. you're taking a much bigger risk. If you haven't gotten stopped out yet, it's probably a good idea to take the loss while it's small, because the thing is, this is now a higher low, and we're going to close in 30 minutes. That is now a higher low. This market doesn't look like it's pulling back right now. Okay, it doesn't look like it's pulling back anytime soon. It takes out this high, 11,614 high. This thing's probably going to work its way into this next resistance zone, which is in what, the 11.8s, right? 11.7s, 11.8s, even higher, close to 12,000. Now, this is the NASDAQ 100 CFD. The numbers are going to be slightly different than the NASDAQ 100 and slightly different than the futures, but it's the levels and the structure. It's the structure really that you want to pay attention to. So because this higher low is established, this is a strong sign for stocks. Okay, so if you're long stocks, swing trade longs, we have a number. Andrew sent out a number of them on Friday, all right, anticipating something like this. This is a good environment for them. Okay, we take this out, we should see a push in the stocks because they typically follow the major index, right? Same with the S&P. Let me take a look at the S&P real quick, and before I forget, I got to take a look at the news. Look at the S&P. So the S&P is doing what the NASDAQ should be doing. The S&P is just like, I'm going higher, and I don't care what anyone thinks. Took out yesterday's high by a lot, right? The previous day's high, 33.85. Today we're at 34.08. That's pretty decent. That's a pretty decent takeout, especially since it wants to close up there, and it's not giving it back, okay, right now. So that's a pretty decisive close, and it took out the highs of the previous couple of days. So that's strong. These pin bars that we now have here established is just a higher low. So is this a time to get excited and buy the whole world? No, because we still face a lot of risk, okay? We still face risk in this area, just like in the NASDAQ. We still face risk, the lower high risk in that area, especially as we get closer to the election. So I'm still not anticipating a new high. And that's an important piece of information because that's how you can adjust your targets for stocks, or perhaps get out a little earlier if you get a sell signal early and reduce risk while you can. Because in this environment, that's the best thing to do. If you have money, take some off the table and then you let some of it ride. If you are the type that you want to squeeze out every penny, then that's going to bite you in the long run, because you're going to hold on to a position that's too big and you're going to give it all back plus more, especially when ego gets involved. So that's why it's always a good idea to have targets and to lock some profit in while you can, while it's available. So that's why, we want to have more conservative targets for our swing trades going into the next month and into the next week. Now, with that being said, let me do this before I forget. Let's go over the economic calendar, because usually that's the first thing I do. Today is Monday, and this is important, especially for forex. Now, we don't have a very busy week, as you can see. I can fit this all on one page. So, Europe retail sales, I wouldn't worry too much about this. That was today. Earlier, we have U.S. 10. This is all old. Okay, that's all out. So this is Australia trade balance. That's old news. Now we have this one, 10.5 at so 11:30 p.m. Eastern time. We have the Australian interest rate decision. This can definitely move the Aussie and New Zealand pairs. We're not in any of those, so I wouldn't worry too much about it. And it's not a huge global market mover. Like, this is not going to move the dollar most likely. Okay, so really only important if you're involved in the Australian and New Zealand side of things. Okay, wouldn't worry too much about those. Now, tomorrow is October 6th, right, 10:40 a.m. This is important. Chairman Powell is having a speech. Now, these can be a non-event, but these can also, if he has a hint in there that the market wasn't expecting, something about interest rates or something about the dollar, it could be the slightest thing, the market will react and the dollar will react. So you have to be prepared for something like that. If there's a wild move, then it's most likely a result of something he said. The idea is not to try to catch the move. The idea is to adjust and see like what has changed after his speech. The ideal situation would be a non-event. He says what he has to say. It doesn't surprise anyone, and we can just go about our business without having to adjust anything. So it's important to be aware of. This is especially important for forex and if you're day trading. All right, so that's that. Now, the next day, which is Wednesday, we have at 8:10 a.m. we have President Lagarde's speech. That can move the euro and the DAX and things like that. So just be aware of it. You know, again, similar to Chairman Powell, if anything is said that's surprising, you may see an unusual movement. The ideal thing is a non-event. FOMC minutes comes out at 2 p.m. on Wednesday. Now, usually the FOMC minutes is a non-event. Usually there's nothing important that comes out there. But on occasion, there could be a surprise that the market was not expecting. Be prepared. That's all I'm saying. Okay. On 10/8, Chairman Jordan speaks from the Swiss National Bank. If you're involved, we don't have any franc positions right now, but you know, I wouldn't worry too much about that one unless you're involved in the franc. And then we have Canadian unemployment rate on, what is that, Thursday or going into Friday, right? Unemployment rate and net change. I wouldn't worry too much about that. Okay, two pairs that we don't really deal with a whole bunch. We have a Canadian trade. I believe that trade is still on, but I wouldn't worry about that much. It's not a really big market mover. Okay, so that's what the news looks like for the week. The biggest piece of information right there is Chairman Powell on Wednesday. All right, so just something to be aware of because it can change this picture real fast. All right, now, so I went over the stocks, I went over Bitcoin. Let's take a quick look at the euro since you know, we're going to talk about the dollar. Look at this euro. Now, actually, let me pull up the dollar index real quick because the dollar index is the inverse, right? The dollar index is a basket of currencies against the US dollar, and the highest weighted one is the euro. And it has put in a lower high. Now, we shouldn't be too surprised. We've been talking about a dollar bounce, right, since August, and this was the bounce. We had the higher low, but the broader structure here is not bullish, right? There's a lower high right there. There's a lower high over here. And this recent high could most likely be a lower high. And we established a little mini lower high, and now it's attempting at a lower low. And we went right back to these supports, right back into the support area here. And I don't see this thing delivering a pin bar right now. So if that broader trend is going to resume, the euro and the pound are going higher. The franc and the Canadian against the dollar are going to go lower. So now with that being said, let's take a look at the euro. So the euro's got that higher low in place. For something like this, I mean, I would consider sending out a swing trade for something like this, but I don't want to buy it in this situation right now. I would probably put out a limit order to see if it will tap in below the market. You have an inflection point right there at 1764, or basically the 1750 area, and we're fooling around with it right now. We're at 1780, right? This thing can easily fool around and pull back, and you know how the noise goes in forex. So something like this, I would probably, if I send something out, I'm going to think about this. If I send something out, it'll probably be a buy limit order at like 1740 or 1750, something like that, to see if it fills. Because these things have been so noisy that it's very likely to fill, you know, over the next day or two, or maybe even going into Chairman Powell's speech. So for those that trade forex, that's an idea to keep in mind. Okay, chasing this thing right now is unnecessary because these things are just so ridiculously noisy that there's plenty of opportunity to get back in, especially if this broader trend, because remember, the broader trend on the dollar index is bearish, this broader trend is bullish. And if that trend reasserts itself, which so far it looks like it's doing, especially off of this key inflection point of like the 1680s or whatever that is, that's a very bullish sign. Okay, so this thing is likely to break higher over the next month. We'll keep an eye on that, but I'm looking for a long here, so we'll see how that goes. All right, so I just wanted to mention that. And gold real quick. I know I'm talking a lot, but real quick. Gold is going to do the same thing, right? I mean, because this is all basically against the dollar. You saw where the dollar is going. So I wouldn't buy gold now, all right? If you're not in from this bottom, we didn't call it because this was tough. This is very tough to trade this thing, all right? The signals were not clear and all that stuff. So now what we want to wait for in something like gold, because this thing can be very painful if you're wrong. Look where it is, right? It's at an old support, new potential, minor resistance. I would wait for the higher low. Just like the euro, I'd wait for a higher low in gold, or maybe even a failed low if it wants to deliver that. Okay, I don't know if that will unfold, but if we get the higher low and that price area would be like in the 1870s, maybe around there. That would be an interesting point for a new swing trade long idea. All right, so something to keep in mind. Remember, a lot of trade ideas, they don't come from reacting to price now. They come from evaluating a level in advance and then price getting there and then price giving us confirmation. Okay? All right, so any questions about any of those, please share them in the chat. Now I'm going to get to what you guys want to see. Let me see how I'm doing here on time. Oh, 25 minutes. That's a long time for me to be talking about my stuff. I like to keep it at 15 minutes. All right, let's get to your stuff. All right, so let's see what we got here. Chris, I also was thinking of shorting, but now, okay, all right, no problem. Kev, I understand what you're saying about shorts now. Thanks for explaining. Okay, no problem, Kevin. And that was a good question, by the way, because a lot of people have that same question. All right, so DJ, BCH, NYCB, Jamia. Okay, cool. So let's start with BCH. Okay, so talking about something that's not performing well. Now, we saw Bitcoin, right? We saw like some of those other ones that were starting to pop up a bit, XRP and all them, Monero. They were acting relatively strong to Bitcoin. And Bitcoin, it really hasn't done anything special yet, and those coins are pretty much developing nice structures. This should be doing better, okay? Based on where Bitcoin is right now, like what I'm doing here is I'm just pointing out the inflection points. I'm picking on these inflection points. And the next resistance here, you have this range right here. And 239 or 240 is that basically that range high. You have this little minor high area at 231. I wouldn't really go by that level. Okay, it's not really that, it's a minor level. And then you have this range low at like 210, or you can even round that to the 200 level. Right now, it's stuck in the middle of this range. I would not do anything with this, okay? Unless it either breaks higher first and then gives the higher low. So you missed the initial move, but you missed the initial move to make up for this lack of structure. I'd rather see the initial move prove itself and then look for a follow-up move, or this thing produces the failed low or double bottom, then it's worth taking a chance on based on this lousy structure. What I don't like about this thing is the relative weakness, right? We saw Bitcoin trying to work its way higher. Why isn't this thing fooling around near the resistance up here? It should be, and it's not. So maybe it's a delayed reaction, but so far I don't like the way it's acting. So like I said, I wouldn't touch it in the middle. I'd wait for the failed low or something, or let it break higher first and then look for the higher low. Okay, like right now, if it kind of gives us a little higher low off of this, it's not enough. It's not enough. This thing is lagging to begin with. Okay, I'd rather pick a coin that's not lagging. Something like Chainlink at least is in better shape than this thing. All right, so that's what I think about that one. I hope that helps. Now let me see what else you have. NYCB. So this one, I mentioned this one a while back, and of course DJ was all over this one. And I picked some up actually, DJ. I picked some up basically on this candle. Once the candle was nearing that close, I managed to pick up. I think I bought January. I think I bought the $12 calls. They were cheap. I got them for like 10 cents. Super cheap, okay? I mean, I should probably went for April, but you know what? I got to take these for 10 cents. Now, this thing has this nice little move going on in here today. It's up, what, 21 cents? Not a whole lot. Not going to do much for our options, but we need to see this thing really start to push into the middle of this range, okay? Now, let's see. My calls are, $12 calls are way up here. So that's probably why they were next to worthless, right? Because they're betting that those calls are worthless. They're pretty much not worth anything. But if this thing could make it to like 10 or the top of the range, these calls will probably be worth a lot more than 10 cents. I mean, if I can get 50 cents out of them or maybe close to $1, I'll be happy with that. I don't expect this thing to go to 12. But here's the thing. We have a start going, right? We have a little start. We have the double bottom is in place. That strong close, and we're getting a little momentum follow through today. All good, okay, off of this range low. What is reasonable to expect on something like this basically is the middle of the range, right? That's like a reasonable expectation. As you can see, this thing, when it pops, right? I mean, that's when it pops, it's got potential here. It has these little, how much is that? Let's see, from eight and a quarter to like 10, what is that? 10.80. So that's what, $2.50 or whatever, or $2.25, something like that. So it's within reason to do that in just a number of days, right? This is only like 4 days. This one over here is like 3 days. So when it pops, it shouldn't take very long, okay? So that's why having multiple months of time makes sense in something like this, when it really should only take a few days to really do what it has to do. So far, so good. Okay, I like the double bottom. I like the effort. Now looks like we have about 15 minutes before it closes. So it looks like it's going to close our way. Okay, right. You got the April 10 call. Okay. See, when I do with these options, I put bids below, or I mean, in this case, the spread on that option that I was looking at was 10 cents by 25 cents. I put a bid in at 10 cents. They filled me. So I was like, all right, no problem, right? And that's that. So if that thing goes to zero, I'm losing 10 cents. All right, no problem. But, I'm betting on that potential that this thing pops, and, that 10-cent option, like I said, I'll be happy selling that thing over 50 cents if it can give that opportunity. That's all you're looking for on something like that. All right, anyway, but I like it. So far, I like it, and I'm looking for this thing at least to retest the middle of that range, hopefully over the next week. This is a banking stock, and I noticed a lot of banking stocks were all trying to turn around. If you look at a lot of these banking stocks, like what's Bank of America, BAC? I mean, look how they're all trying to turn around a bit. You see the recent bullish price action? The whole sector kind of follows each other. There was a few other ones that I was looking at. I can't remember the symbols right now. So yeah, when you see those wide spreads in those options, you just bid on that low part of the spread. If they fill you, great. It may take days for them to fill you, but I just leave it in there. If they want to fill me, great. If they don't want to fill me, then whatever. I don't need the risk, right? So that's how you play that. Don't take the offers on those because it's just not worthwhile. All right. So anyway, I like NYCB still, and we'll see how that one goes. I didn't call that trade officially. I just basically shared it in here because it's a very aggressive trade. It may not work out. Okay, especially since we're doing it with call options. Now, and plus I know a lot of people aren't familiar with the options to begin with. I would not buy the stock outright. All right, so let's take a look at Jumia. Now, Jumia is a trade of the week that I called like 2 weeks ago. By the way, have you guys seen FOUR? Have you seen where that one went? That was a trade of the week that basically it went to its stop, and now it's like at target 3. In just like a matter of like a week or two. Ridiculous. I don't know if anyone got that, but wow, what a move. So Jumia, Jmia, this is like the African version of Amazon, or at least that's what they tout it to be. And this one, again, great. This is a great options opportunity, especially if you're buying a lot of time on something like this. Because if you buy deep out of the money and you buy a lot of time, you could still get them for like maybe $2 or $3. When I say a lot of time, I'm talking at least 6 months, okay, or longer, and deep out of the money. If this thing pops, and as you see, it has the potential to do it, if this thing pops, those option premiums will expand very quickly. So that's just something to keep in mind. The structure right now is developing nicely. Okay, yeah, I missed that one too, but man, what a nice one that was. I'll take a look at a chart here in a second. But so this one, look, it's been acting just a little, slow, uneventful price action. Today it's giving us. Yesterday it gave us Friday gave us a strong close. Today, okay, so I wouldn't worry about this one. It's behaving properly. It's doing what it should be doing. It's not pushing lows. Okay, that's what we want to see. It's kind of giving us like that round bottom formation, which is a good start. Now, I don't know if that will continue, but the thing with something like Jumia is this is like a news-driven stock, and it's also a day trader stock. So any little piece of stupid news that comes out on this, like, oh, they announced this, or oh, they announced this partnership, or oh, management announces that, or whatever, comes out of nowhere. All the day traders, it pops up on their radar, and they all buy this thing like it's, the next Tesla, and that's your opportunity to take your profit. Okay, so that's a chart pattern is not going to really help. It's not really going to help us with that. It just takes time, and you have to bet on the potential of the stock. But so far, I mean, chart wise, technical wise, it's doing its job so far. It's just slow. Okay, no problem. I still like it. And I think it's a great, like I said, great options opportunity if you don't want to buy the stock outright. The options, you know, just think of it from the options perspective. With, you know, if you buy 100 shares of stock, this thing is at $8.13. So 100 shares will cost you $813 or tie up $813, right? You can buy an option for like $100 or $200 with some time, 6 months of time, and you can buy, you know, if you were going to invest $800 or $600, you could buy 300 shares without tying up that, you know, the capital in your account, and benefit from having control of 300 shares if this thing pops up, which will give you 3 times the profit if it goes. That's the advantage to long options. Okay. The other advantage to long options is if you're wrong, like if Jumia goes to 0 or Jumia goes to 5, you lose your premium. That's the most you can lose. So if you paid $200 for your option or your 2 options or your 3 options, which means it's $600, the most you could lose is $600. You buy that $813 stock, you buy 100 shares, and it goes to 300, it goes to $3, you lose $500, right? And if it goes to 0, you lost your whole investment. So the option is like an automatic stop. You can think of it that way. All right. But you also have the choice to get out earlier and you know, keep some of your capital and take a smaller loss. So options give you a lot of flexibility, but you really need to understand what you're doing with them. If you don't, you're not comfortable, and it's best to like paper trade them or get comfortable. It can take some time. Michael showed me a picture because he had a question about the platform. For those of you that don't know, I did a webinar. I conducted a webinar on options, on how to place the orders a few weeks ago. It's in our webinar library on our website. And if you're a free member, you can check that out there. But I introduced a platform on there where it's a free platform. It's a paper trading platform. It's not real-time data, but you can actually trade options on there based on, you know, you can place the orders, take the positions and all that stuff and see how they behave. So it's a nice paper trading tool. Michael is loving it because it's really giving him a good feel for what to expect. Okay, so thanks for bringing that one up. I know I talked a lot about it. So yeah, Jumia. So yeah, so Kev, like I said, I like Jumia. That 850, where are we at right now? We're closed at 8. So, and where's this high back here? I mean, so this trade is active. This trade is an active trade. You know, you can buy it. Just remember, like what I said, this thing pulls back, it sucks. If you're going to buy the stock outright, you know, the stop that we have here is $7.15, which is actually slightly higher than this swing low. So it might be a good idea to put it a little bit lower than that and take a little bit more risk in terms of structure. But that's how I would handle Jumia. But really, I'd rather just buy the options. Okay. So XRP, yep, we talked about that. Shashank, no problem. NEO. So NEO is a stock that Andrew called, I believe he called this one on Thursday or Friday. And this is like a play with Tesla and Workhorse and Nikola and all them. NEO has got some, he was betting on the continuation pattern, okay? The consolidation breakout, which occurred, and looking for the follow through. Now, this thing is still in a vulnerable location. We haven't cleared the location. This is a failed high location. Now, the good news is it hasn't failed yet, but you also have a supportive stock market. If that stock market continues higher, which it's in a position to do just that, then this thing, you should at least have that going with you. And this thing is likely to break higher, you know, during the week. So if you're in NEO, I still think it's a good position. This is one of those where, hey, you set your stop, let the market do its work. A big mistake in a situation like this is you get faked out by the candles. You're like, oh, bearish pin bar. Oh, inside bar. Oh, takes out the, oh, you know what? I'm getting out. I don't like it. Okay, meanwhile, it's really not doing anything. And next thing you know, it breaks higher. Why did I get out? So if you have your risk defined, a lot of times it's better to just let the market work and minimize your thought process. Do not second guess. like Workhorse. I'm going to bring it up again because, I bring up this example all the time. I'm sure many of you are tired of seeing this by now, but this is one of those situations, and we're waiting for another trade in this, by the way. Workhorse basically tapped us in. We had to sit in this trade for a month or two, okay? A month or two. It was something like that, or a month and a half. It almost stopped out a number of times, even after going in our favor a little bit. And it was very hard to hold on to, but our philosophy was the same. Let the market do its job. It never went to our stop at 1385, although we were prepared for that, and instead it doubled. It went from 15 to 30. I say 38 at 1385. It went to $30 a share, okay, after about a month and a half of holding. So that's an example of just stay out of it and let the market work. All right, so that's NEO. That's NEO and Workhorse there. So let's take XSPA. So, oh yeah, well, DJ, like I want to get back into Workhorse. I didn't do it with options the first time, so I want to do it with options the second time. So Expressa Group. And I saw Pau earlier. Where's Pau? Oh, Jumia was asking about Pau. Hey, Pau, nice to see you. Forgot to say hi there. All right, look at this. So Expressa Group, XSPA, nice pop. Now, what is this? I'm not familiar. It's a $2 stock. Okay. First thing I want to see are the inflection points, right? We have an inflection point here. So it's popping off of an inflection point. That's nice. We have these other inflection points here at these other points, right? And then we have this ridiculous move here. All right, so that that's not really gonna count for anything. So at this point, depending on, I don't know if they have options on this one. But this is tough because if you're chasing this, the pop is on its way. It's nice if you're in. If you're not in, there's a couple of ways you can go about this. I mean, you still have plenty of potential, and you also have to look at what is the risk. So if you're willing to buy this now at $2.26, right, the low is $1.73. So you're looking at you have to give it some more room. So you figure about 75 cents of risk, maybe even $1 worth of risk if you buy it right now. So if you're willing to take that risk, the next question is, what is the potential if this momentum can continue? Because keep in mind, you are fighting some structure here. We have no evidence that this structure is no longer in play. I mean, you have the lower high, and I see another little lower high over here, like this area right here, and it's trying to break now, but there's no high or low. This doesn't really count. It's too flat. It's not really a high or low, although it's when it's iffy like that, I want to see clear cut. Okay, so I won't go by iffy. It's got to be clear. A clear high or low looks like this, right? That's clear cut. You can't argue with it. Popped up, pulled back, and then started to go higher, high or low. I want to see something like that develop here. Even a mini one, okay? Even a mini one would be nice. A retest of this little minor resistance of $2 that can act as a support. That's one consideration. All right, if you want to get involved. Okay. Good to know. Good to know. So this is going to be a hype stock and a day trader stock. That explains the vertical candle, which is no problem because day trader stocks can be very good. When they all pile in, you want to sell to these guys and girls. So there's a couple of ways. You can wait for the high or low if you don't want to chase this now. If you get into this now, like I said, you're facing about $1 risk. If you wait for the higher low, you could get a better reward risk, maybe the failed low, because there's nothing here that says this thing's not going to establish another lower high, not yet. Okay? Now you may argue and say, but what about this? Isn't this structure bullish? And aren't we just correcting that? Yes, that's true. But the thing is, the correction is too deep, and this momentum may still be in play. So do I think this thing is bearish? No, I don't think this thing is overall. I don't think it's bearish. I would just like to see better structure, all right, to increase our probabilities. So like I said, the higher low, or you can buy, if you want to buy this now, another way to go about doing that is with smaller size. So you can, again, if you're doing it with options, that would be even better because you could buy a bunch of cheap options. I don't know, again, I don't know if there's options on this one, but you can buy, 10 calls 3 or 4 months out or something like that. If you're wrong and this thing pulls back instead, you're going to take somewhat of a loss, but at least you're not caught in the stock. And if you're wrong and this thing pulls back on your options, it shouldn't be as dramatic if you have, 6 months worth of time on an out of the money call. Let's say you buy, a $5 call, something, or something lower, maybe a $4 call, and you buy that 6 months out or something. You may be paying $1.50, $2 maybe, and that's pure time value that you're paying. So it's pure hot air. It can go to zero easily if this thing turns and pretty much goes, back to $1 or whatever. But if this thing holds and then there's a pop, that position, those calls should be okay as long as you have enough time. Don't make the mistake of buying front month options. That's just a pure gamble, and most likely those are usually worthless anyway. So the options at least give you some more flexibility and allow you to trade bigger without taking the same amount of risk as you would take with going long shares outright. But this is a pretty inexpensive stock. So, if you want to do the shares, you can do that too. So those are your choices on something like that. So if you normally do 100 shares of this thing, or 200 shares or 300 shares, maybe if you take a 10% position or a 20% position, so you do instead of 10 shares or 15 shares or 20 shares. If the thing pulls back, you're not going to care. You're going to be a strong hand, right? And that's what you want to be, a strong hand. If you have to bang it out at a lower low because it's not working and you only have to bang out 30 shares, you're going to be like, so what? You lost a couple of dollars. As opposed to you have 1,000 shares, which is what a lot of people do. They pile in thinking, this thing's going to go to $5 and I'm going to have 1,000 shares. Okay, and then they have to bang out 1,000 shares and they're going to be a lot more nervous about it. You don't want to be in that type of position. You want to add to it as it starts developing and producing structures that are favorable, which it has not done yet. So I like the idea. DJ says here, January, wow, that's a long time. 80 cents. That's cheap. Okay, so that means you have a year and a few months of time for 80 cents for this thing to go to $5. That's cheap. The reason why it's so cheap is because it wasted all this time pulling back, and those premiums it basically means no one's looking at those calls, all right, because no one sees the potential. That's where there's opportunity. If this thing pops and you get one of these moves, what is that? To like $8. I mean, you don't even have to get a move to $8, but if you get a pop and you have that much time in your option, that's a nice trade. I'm going to look at that too. Okay. Thanks for pointing that out, DJ. So not bad, not a bad stock. I pointed out the risk, but just, keep some of those things in mind. If this thing starts to move, you're in a good position. If it turns to garbage, which it can do because you're fighting the structure, then be prepared to take the loss. No need to get caught in stuff like this. Okay. Like no need to ride this thing to $1 or lower. There's just no need. So that's XSPA. Thank you for pointing this one out. Man, I've been talking so much on these things. All right. I went over like 3 stocks. It's like I'm an hour into this practically. All right. Let's see what else we have here. OMG. So let's take a look at OMG. So this one's been on the radar and people have been asking about this one. I like this coin. All right. I like the way it's behaving. Let's first put the inflection points in here. All right. I mean, look, keep in mind, you're going to have a lot of herd mentality price action in this because it's inexpensive. These are your inflection points, and you're basically developing a higher low off of one right now, which is a good sign. But again, now this one's following Bitcoin, okay? Compared to BCH, do you see the difference? Would you rather buy BCH or would you rather buy this? I'd rather buy this, right? Clear cut higher low. It took out yesterday's high. Okay, that's all good signs. It's following along with Bitcoin, all good signs. All right, establishing the higher low, nice initial move before it, off of a broad bullish. It's correcting the bullish move. All right, no problem. All bullish signs. So if you like OMG, this is not a bad one. Again, like I said, why don't we call all these? Because it's all the same trade. If we tell you, hey, buy OMG, hey, buy Bitcoin, hey, buy Ethereum, buy Chainlink, and then Bitcoin turns to garbage, everyone's going to get stopped out and everyone's going to be unhappy and like, I bought all these stupid coins and they got stopped out. It's all the same trade. So you have to decide, if you like this one, you like the potential, and all those things, how many coins you want to buy and all that. But the structure's there. Your risk is going to be defined by $3.60. So you figure 3.25 is where your stop is going to be, something like that. basically, because if this high or low fails, then you don't want to be caught. Because now Bitcoin has been tricky like that with us, where it tries to go, then it doesn't go, and then it develops a higher low and then a lower high and all that nonsense, right? So if it fails, it's still possible that you may get a higher low over here in this area. What is that, the $3 area? Maybe a double bottom. What is that, in the 270s, 280s? Maybe failed low, right? Similar to Bitcoin. We don't know if we're going to get those inflection points, right? We don't know if the market will deliver. So you have to be prepared in case it does. So if you buy this thing now and it fails, it's okay to take the small loss. Nothing wrong with that. You know, people get upset, oh, this thing sucks, I'm tired of taking these losses. The mistake people make is they get too big, and then you got to take that loss, which is unnecessarily big. So you take, like we're risking 1% on Bitcoin, right? 1%, it's a small position. Now, for something like this, again, if it starts to, like let's say you take a 1% risk here, and it holds, the higher low holds, and it starts to break. You want to add to it on the breakout? That's up to you. This thing starts to break 4.25 and you want to add, okay, at least it's going your way and you have some at a better price. So now you're basically putting on more of a winner. And that's a good habit to get into, okay? And as it starts to go, if it starts to really push, then you need to be prepared to start reducing risk up in these areas. And then if you try to hold on to some and see if it wants to keep running, all right? And that's where you try to hold for one of these situations. And that's where, like on TradingView or on the other public forums, everyone, oh, buy OMG, buy, and that's when you're selling it to them, okay, here up there. Or it's a good idea to lock in something. I remember on that day, I said, if you're in this thing, try to take something off the table if you can. Lock in something, because then you face this, right? All the people that bought, and now they're banging it out because they bought the top. So those are your choices. Just like Bitcoin, those are your choices. You have to decide. Like I said, if it fails now, then look for these inflection points. It's not a good idea. You may say, well, why not I buy some now? And if it pulls back to these points, I'll buy more. You could do that, but that's a lot riskier because now you're going against the momentum. And if this thing breaks that support, now you got a bunch of it going against you. Okay, so no need to take that risk. It's not like you're buying AMD here. You know, it's not like you're buying a great stock that has a lot going for it. This is an altcoin that just has a lot of, you know, hyperinflated promises as far as we can say right now. So you have to be careful with buying, you know, like that. If you can afford to lose the money, okay, no problem. But that's a lot riskier than buying it, you know, as it starts making bullish structures or bullish confirmations. Okay, so that's OMG. Thank you for bringing that one up, HS. All right, so DJ, right? So the next time I wanna on Workhorse, I'm definitely looking to put on an options trade for that. So let's see, it was Neo. Okay, right. Okay, no problem. All right, let's see. So I think I have everyone's questions answered. Do I have any more questions? Any more questions about any stocks, any market you'd like to see? We pretty much covered Bitcoin, some of the altcoins. We covered the stock market, some stocks. Look, here's four. Look at this. This was a trade of the week that I sent out from the Talking Market show. And let's just look at this trade real quick, because I think some people may have still actually got this one. This one would have been a great options trade too. Now, this thing was a buy stop at 46.85, right? Which triggered. It activated around here somewhere. And then it pulled back and went to the stop at 44.50, right? The stop here is 44.30. The low was 43.57. So it went lower by $1, gave a double bottom. Now, I remember someone in the chat room said that they had forgotten to put the stop and they were still in it. What to do? Hold on. There was an inside bar. Hold on. Hold on to this thing. Look at this thing. It went vertical. Okay, and it went to the third target is 53.85. Today's high is 53.10. 53.10. Okay, so wow, these trades of the week. If you're new to Greenbridge, make sure you're signed up as a free member, because I send these out to our free members. I send these out to everyone. Now, these don't always work out like this. And if you had followed this exactly, it would have stopped out. So you had to either have the courage to get back in, or maybe you didn't set the same stop and you managed to stay in it. Okay, but wow. And another one, that Reggie, I called Reggie a week before. Look at this one. Now this one never got us in. I had a limit order below the market and it never filled, okay? But I know someone that shorted a put on this and made money, okay? It was a very aggressive trade. I would not suggest shorting a put on this thing, but wow. Look at this thing, look at this thing. So this thing is at all three targets. Right? Today's high is 58.34. Look at my third target, it's 58.35. They knew something. They knew there must be market makers that are receiving my trade of the week. How do they know to stop this thing? I'm just kidding. Just joking there. But man, so when you see this thing, by the way, if you watch a trade of the week, these are good candidates to paper trade. No problem, HS. HS consents. I'm going to wrap this up soon. If you get the trade of the week, you know what? I suggest paper trading it. Paper trade it, watch it, see how this thing goes. If you're observing it and it's pushing into the targets right away, that's not a time to be buying it, okay? Targets are places to reduce risk, not buy. It's just something to keep in mind. That's when you want to sell to all the people who don't know any better and they're buying. That's why we put targets there. So just something to keep in mind. But wow, what a move on these things. So keep an eye on those trade of the weeks. I mean, they don't, well, not always Shashank, but these things have been doing pretty good. Like they don't always work out real nice, but I'm picking stocks with particular criteria and particular time horizon, right? And they're swing trades. That's why, I'm measuring probabilities, and I mean, look at this thing. This thing was bullish the whole time. This is one that Powell mentioned a while back. Higher lows and higher highs. So right off the bat, probability is in the favor of if you're going long, compared to something really aggressive like NYCB, which is a trade that I have not officially called, because the probability on something like this is a lot less. If it works, yeah, it's going to be a nice trade, but I won't share this with everyone as an official trade because the chances of it working out are much lower, right? And that's one of the criteria that we use. I want to pick high probability trades that we're going to share as the trade of the week, not super aggressive gambling type of trades, which is what that is, okay? People really have to understand what they're doing to take a trade like NYCB and understand what can go wrong with that, okay? Yeah, I mean, Reggie, we had no choice, DJ. Reggie never activated. That was a limit order. It never filled. So yeah, we weren't in that either. But like I said, I know someone that shorted a put on that and made money. 4 also, that one stopped out, but I think I hope someone got that one. And HIB, yeah, HIB was another big one. Look at this, it's still going. HIB was 40.25 was our third target. This thing's at 48.58. Why didn't someone tell me to stay in this one? This is Hibbett Sports. Unbelievable. I called this weeks ago. I called it on the breakout. Okay? I think the breakout that I called, by the way, was over here. That's where I called it, right? The buy stop was at 35.15, right? The breakout of this high. Look at that thing since then. Man, crazy. So yeah, so again, I'm not sitting here saying like, these are the best trades in the world, but keep an eye on those trades of the week. I've been trying to stick more to stocks than other markets like forex and all that stuff because a lot of people are more interested in stocks. Plus, there's a lot more opportunity in the stock market. Okay, there's just so much stuff going on there right now. All right, you guys, so if I don't have any more questions, I'm going to wrap this up, NSXUSD. So I'm just going to leave you with the stock market here. Again, oh, was he in for? Yeah, wow, what a move. So if I don't have any more questions, guys, let's see, how long have I been talking? Yeah, I've been talking, just about an hour. Okay, not too bad. So I'm going to leave you with the NASDAQ. Again, bullish sign, good for stocks. So if this is good for your stock portfolio. This is good for swing trades. We have a higher low. I'm anticipating at least another run for the rest of the week. Hopefully Chairman Powell doesn't say anything negative, and we get closer to this area here. Once we start pushing into those high 11.8s or back to 12,000, I would be very cautious. Everyone's going to be touting stocks. Everyone's going to be saying the market's going to go up forever and all that kind of stuff, especially if we start testing the breakout high in the 12,000s. That's where you want to be cautious. And you should be at least looking to lock in profits or taking something off the table and try to let some run. I mean, that's the most effective thing to do in those situations. All right, you guys. So again, if you're new to Greenbridge Investing, please make sure to check out our website at greenbridgeinvesting.com. We have a swing trade signal service by text and by email. We have portfolio management ideas. Oh, sure. So how do we sign up? Oh, HS. Well, if you're a free member, if you go to greenbridgeinvesting.com and you sign up here, in fact, I'll put the link in the channel here. I don't know if it'll work because YouTube doesn't seem to like these bit.ly links. Okay, no problem, DJ. Yeah, I'm going to put it in the channel here. Hold on. So it's called Trades. This is the bit.ly link for our, it may not work because YouTube doesn't like, I tried these other bit.ly links and it wasn't working. Or maybe you want to try a different browser or something. But here's the thing. If you sign up as a free member at Greenbridge Investing, every Tuesday when we do our podcast, the Talking Market Show, we always pick a trade of the week. And then we email that out to all of our free members. If you're a free member and you haven't received it, check your spam folder, because I notice sometimes it goes into the spam folder. You also want to make sure you whitelist Greenbridge Investing, whitelist our email address so you don't get that spam folder problem. I don't know why it thinks it's spam. It's not an ad. It's a trade idea. And you can receive it that way. Now, we also have a free trial on our website. We have a 7-day free trial for our premium service. But that link that I put in the chat room right there, that's the sign-up form for our free membership. Just sign up. You'll be on our list. And when I send it out, you should receive it. As far as education, we have about 1.5 years worth of educational webinars in our webinar library. Many of them are available to our free members. But if you're a paid member, we have some in there that are only accessible to paid members. You have this 7-day free trial, so if you sign up for that, you can check some of those out. But we have a lot of educational content. It covers Elliott Wave, it covers our trade signals, it covers chart patterns, it covers so many topics. Okay, Ricky just joined. If you haven't, could you go over dollar Canadian? All right, real quick. I was just going to wrap this up, but you know what, Ricky? No problem. Let's do it. Dollar Canadian. Now, so the dollar Canadian, I mentioned this earlier with the dollar index real quick. And this is an old trade, so I got to update this. Ignore this trade information. That's not the most recent trade. The dollar index may be pulling back, okay, with a lower high established. This basically is a reflection of the dollar index. It's possible to get the higher low, but I'm seeing bearish candles and the euro is shaping up for a long. So here's the thing. What I would consider, you should have gotten out of 2 targets, I think, on the dollar Canadian, right? Am I right, Ricky? If you've exited on 2 targets, or at least one, I know it went to at least 1 target, what you should do in that situation is, okay, no problem. What you should do is at least put your stop to break even on this, because the thing is that this is likely, if this lower high stays intact, and remember, we have Powell speaking, plus the Canadian has a bunch of news coming out Thursday and Friday. That's plenty of opportunity for this thing to start pushing lower. Okay, it could also turn around, but with the dollar index turning, this thing is going to have some pressure. And the broader trend here is bearish. So if this thing starts pulling back, right, and you have 2 targets reached, in my opinion, the right thing to do, or the effective thing to do, is put your stop to break even. If you get stopped out, at least the trade is still green because you locked in 2 targets. And now you know why we lock in targets. If you don't want to give back that profit, then it's not a bad idea to get out now. You took out yesterday's low, right? And it's fooling around. This thing could develop a higher low, and you may be like, I should have gave it more of a chance. So you have to decide. If you move your stop to break even, then you're giving it a chance. Okay, you're giving it a chance to develop the higher low and perhaps try to make another run. If it can't make that other run, you should probably get out and take whatever you got on that 3rd portion. Okay, if you get out now, well, you lock in what you got, and then you just have to wait for the next trade. And you can't feel bad if this thing turns. I'm like, I should have given it a chance. Right? You have to decide in advance like what you'll be okay with, and then once you make that decision, that's it. Right? There's no reason to be sad or happy. It's just however the market performs from there. You're taking yourself out of the equation and letting the market do its job. Okay, so that's how I would handle that one. And I'm looking for longs in the euro dollar. And I was thinking about sending one out tonight, just for your information. because I'm still very bullish on the euro, and it's setting up for another long, which is not bullish for this pair. Okay, so just wanted to point a few of those things out. Anyway, all right, thank you for asking. So I'm going to wrap this up now if I don't have any more questions. And so like I was saying, with Greenbridge Investing, make sure you sign up, register for our channel here, like my video if you like the video. If you subscribe, you get an email notification every time I do one of these or when we do the Talking Market show. And if you can, please share the video on your social media, on your social networks. It'd be a very big help to us. We really appreciate that a lot. All right, so thank you again for that. And I think that's pretty much it, right? Let me just check this. We just close out with this. The market's closed. The market's closed. It's been closed, and we closed strong. All right, everyone. So I'm going to leave you with that. Thank you again for watching. I'll see you guys in the chat room, and we'll talk then. All right, everyone. Talk to you then. Thank you.